What's up, guys? Welcome to Roensch Capital Charts. Today we're taking a look at C3.ai stock, ticker symbol AI, on a variety of time frames in anticipation of the next trading day, Monday, February 5th. Well, listen here, AI stock on Friday finishing up about 7 cents, right? About 0.25%, 0.28% to the upside here. We're going to take a look at this again on a variety of time frames, try to get as much context as possible to lay out a couple of scenarios as we head into Monday. First thing I want to point out here to you guys, later in the day on AI stock, we saw kind of a nice little rejection setup forming for some scalpers to maybe come in and make a little bit of money. The channel did tighten down a little bit, down to about 8 or 9 cents here. So that would have been something that I would have been paying very close attention to, but I'm sure we had some traders coming in here and, like I said, making a little money off of these little semi-predictable moves there. If you guys do want to get scalp setup alerts, maybe even platinum one-on-one, take a look at the link in the pinned comment. Get grandfathered in at the current rate. Hope to see you join our Roensch Capital Gold Room. Let's move on here to the 5-minute chart now and get a little bit even more context as far as volume is concerned on these moves. So you can see here that right off the open, we had kind of a semi-flat candle, only a couple pennies wide on big volume. Now, of course, the bears barely won that, but the bulls came back and got a pretty high volume pump there off the open, back to kind of reclaim the majority of what was lost there late in pre-market. Okay, then we had kind of a midday low volume fade, and by the way, if you're bullish, any fade you'd prefer to see low volume ideally. And then we did see volume pick up a little bit as the stock moved higher, which again is good to see for the bulls, with some good consolidation there into the close at what was essentially intraday highs. So that's good to see there on the 5-minute chart. Let's zoom out now to the 30-minute and get some even more context as we move into the day-to-day self-fulfilling prophecy indicators on the 3 most popular charts, right? The 30-minute, the 4-hour, and then we'll take a look at kind of the big boy, right? The most important one, the daily. So interestingly here, you saw on Thursday, right, we spent the majority of the day beneath both of these moving averages. The 50 period, the white line, and the 200 period, that gray line. We faded off of that in pre-market, tried to reclaim it, weren't able to do so until after market close, right, in the after hours. And then what was interesting is we faded off the 200 period in pre-market on Friday, but the bulls ended up kind of winning this one. We reclaimed into the close, and remember we saw that good consolidation on the 1 and 5-minute chart, and we held it through the low volume after hours, which, as always, take after hours with a grain of salt since the volume is so low. But reclaiming that 50 period on the 30-minute chart really is a good thing to see if you're a bull. Now, from a bearish perspective, a lot of bears are going to be looking at that 200 period and saying, listen, I don't think we're going to be able to reclaim that here on the 30, but if you're a bull, you want to see this 50, priority number 1, hold, come up, make our way up for a test of that 200 period, and then ideally break through and pull away to the upside. That's what we're looking at when we're looking at the 30-minute. But as always, we're looking at more than one time frame, right? We're never making trades off of just one time frame. It's unreasonable to do so. It's kind of lazy, right? We want to look at all of them and try to get as many things lining up in our favor as possible, while also understanding anything that may not be lining up in our favor, right? Not just looking for things that confirm our bias. Let's look at the 4-hour now. The most relevant thing here is very obviously that 50 period sitting currently right at about 25.57-ish. So listen, I'll lay out both a bullish and a bearish perspective here. If you're a bull, you would ideally want to see us make that 2.5-ish, 2.2% move to the upside, test that 50 period here on the 4-hour, break it, and reclaim it as support. If you're a bull, that would be a beautiful thing on Monday here on the 4-hour. If you're a bear and we end up seeing a test of that level, obviously you want to see a reject and hard fade back down beneath that level, putting some distance between the stock price and that level, okay? I like to think of these charts, by the way, the 30-minute, the 4-hour, and the daily, as separate things to look at, trying to decide which one is the most immediately relevant, but also recognizing when things line up across those charts. Okay, just for a peek inside what I'm thinking when I'm looking at these. Now let's move on to what is arguably the most important chart of all, which is the daily chart. Okay, obviously, we have earnings coming up later in February here, February 28th, after the market closes. Now, currently, the nearest level, at least that's highly watched by like everybody, right? Which is those are the only levels I'm interested in, by the way, are the ones that everyone is paying attention to, is that 50-day, currently right around 28 bucks a share. It's going to require about an 11% move to the upside to even make a test of that. So while that is the next thing I'm watching to the upside, and ideally, by the way, if you are a bull, you'd like to see both of these reclaim that 200-day as support, right? That would put us above 30 bucks a share, and that gives us open sky setup. You know, once we can rip through these more recent highs, that's kind of an open sky setup. That would be a beautiful thing. But to be more relevant in the very short term, anything standing out to you on the daily chart here? Because to me, 2350 is a huge level, kind of that range between 2340 and 2360. That is obviously a highly relevant area. So listen here, on the daily chart, from a bullish perspective, over the next especially Monday, but over the next few days, if we can just hold 2350 and ideally put more distance between us and that, getting closer to that test of the 50 inevitably at 28, that's a beautiful thing. But if you're a bear and you're looking at this daily chart, you have one thing on your mind and one thing only on your mind. Break downside beneath 2350 ASAP, because that would be incredibly discouraging to a lot of bulls, and that would be very encouraging to a lot of bears, which would support your bearish thesis. Now, as far as volume is concerned, guys, actually really interesting. Volume has kind of tanked off lately, and being that the stock is lower, you know, if you're a bear, that's not your ideal scenario. You'd like to see volume as high as possible on a downside move, but if you're a bull, that's actually a relatively good sign that volume seems to dry up as the stock gets down into this lower range. Because again, you want higher volume, a bigger sample size of the market, ideally, agreeing with your sentiment, which in this case would be an upside move if you're a bull. That's when you would want to see higher volume, okay? Now, let's finish up here by taking a look at what the options traders are telling us as we head into Monday. Keep in mind, small sample size, 47,562 total contracts traded on Friday. So, that being the case, we have to take this data with a grain of salt, but I still want to look at it. Look at this, 34,981 calls, 12,581 puts. This chain, overall call put ratio, leaning very, very bullish. Short-term speculation, 0 to 20 delta, 12,195 calls in that range, only 3,306 puts in that range. We're seeing nearly 4 times the short-term bullish speculation as we are seeing the short-term bearish speculation. But as always, small sample size, take it with a grain of salt. Listen, before you head out, if you wouldn't mind, leave a comment. Let me know what stocks you'd like to see me cover here on the channel in the near future. Even if it is just more AI stock, that feedback helps out tremendously, and I'll see you in the next one.